Good afternoon, everyone. We're just going to start now. Good afternoon. Thank you for joining us today. My name is Adetayo, and I will be your host this afternoon. Evolving consumer and technology demand in our world today has resulted in macro and micro environment for businesses that is codependent. The implication of this is that there's a confluence of regulatory requirements that has made it more complex for any singular organization to achieve effective regulatory compliance. Now, what I mean by this is, for example, if I have an insurance company, previously all you had to worry about was complying by the requirements of Nikon, but that is not so anymore. I mean, these days you have to worry about what is going on, what requirements is expected of you in terms of data protection. If your business processes cross out of your own sectoral reach, you also have to concern and be aware of what is going on in the regulatory environment of other sectoral regulators. This is implication, and it makes it harder for you, or more complex, so to say, to achieve regulatory compliance. And it is in this light, in the bid to help organizations effectively navigate the evolving regulatory environment and achieve effective compliance to regulatory requirements, is why the Society for Corporate Governance Nigeria has put together this webinar today. The Society for Corporate Governance Nigeria is a non-for-profit organization dedicated to the development and expansion on knowledge on corporate governance in Nigeria. We have a membership platform of individuals and corporates, that's organizations who share our values and are equally committed to our objectives. And we jointly contribute our efforts to pushing the message of corporate governance. We do this through trainings, seminars, webinars, as we have been forced to now resort to because of the pandemic, advisory support, consulting, research and publications, and advocacy for good corporate governance. So we do programs that help us to share the message of corporate governance and enlighten organizations on how they can effectively implement structures and framework for good corporate governance practices. The first edition of this webinar was held a few weeks back, and it brought together representatives of the Nigerian Stock Exchange, the Security and Exchange Commission, the Central Bank of Nigeria, and KPMG to discuss changes in the regulatory space because of the pandemic. And so for this the one we're having today is a concluding session, and we have with us this afternoon Mr. Ephraim Iwokoneya, who is the Director of Compliance Monitoring and Enforcement for the Nigerian Communications Commission. We have Mr. Leonard Aka, who is the Director, Governance, Enforcement and Compliance, National Insurance Commission, that's Nikon. We have Mr. Abdulkadir Dairu, Head, Inspection and Investigation, National Pension Commission, that's PENCOM, and Dr. Nelson Anumaka, Director, Corporate Governance Directorate, Financial Reporting Council of Nigeria, the FRCN. They are the ones who have brought us our Nigerian Code of Corporate Governance. So this afternoon, all our erudite speakers will be sharing insights on the changing dynamics of the regulatory environment, where sectoral regulations overlaps, what you're supposed to do when regulatory requirements overlap, and what you need to do to ensure that you have effective compliance, to ensure that you achieve effective compliance to the plethora of extant regulations that we have. The speaking sessions will run back to back, and we would immediately after the speaking sessions start to take questions. So we're going to have a live question and answer session. We've had some participants previously email questions, and so those questions will be taken live by the speakers and answered for everybody to benefit from. So if you have any questions, either whilst the discussion are going on or once we open the question and answer session, please send your questions in through the question and answer toolbox. So you will see a small box at the base of your screen that says Q&A. That is the box that you should use to send in your questions. Please make sure you send in your questions through this tool, because if you send in your questions through the chat or comment section, we might miss them. So please ensure that your questions are sent in through the Q&A box. So if you have other comments or inquiries, you may please send that in through the chat window, or you can raise your hand, digitally raise your hand. A member of the team will respond to you immediately. Thank you so much for joining us again. Please sit back, relax, and prepare for an enriching discourse. I hope to see you again shortly after. So we are ready for you, Mr. Ephraim. You go first, sir. Thank you.
Okay, thank you very much. You can see my slide now. Let me say a big welcome to Society of Corporate Governance for extending this invitation to me for the second part of this session, and to welcome my colleagues from Telecom, from Nikon, and from Financial Regulatory Council. This afternoon, I'm going to share with you perspectives with respect to the changing dynamics of regulatory compliance in the Nigerian telecom sector. My agenda will go this way. I will start with some introductory remarks. I will look at the positives and negative impacts the pandemic has brought to bear on the telecom industry. You'll be surprised to know that there are positive impacts. So not just only negatives, there are some positive impacts it has brought to bear in the industry. We'll go through the challenges this pandemic has brought to bear on the industry, challenges for us as regulators. I'll share with you our perspectives with respect to what we are looking at the way forward in the new normal. And then I will conclude. The country and indeed the entire world, both the country and the economy of the entire world has experienced what you may call an upheaval in the last 4 months, occasioned by the COVID-19 pandemic. And the Nigerian telecoms industry has not been spared in this pandemic. A lot has been said about how the Nigerian telecom sector has remained resilient, notwithstanding the economic crunch occasioned by the COVID-19 pandemic. But however, a closer reflection shows that it is indeed a mixed bag. It's a mixed bag in the sense that there are positives and there are negative impacts that the pandemic has brought to bear on the industry. But let me start from the good news. The good news is the fact that riding on the sound regulatory environment, the Nigerian telecom sector has shown some positive signs amidst all challenges. There has been a noticeable boom in digital services, which ride on the telecoms infrastructure. You will recall the fact that the telecom infrastructure is seen as the infrastructure of other infrastructures. So there has been a lot of boom with respect to digital services that ride on this infrastructure. And according to some analysts, the Nigerian telecom sector remains the fastest growing, remains the most resilient, it remains the largest contributor to the country's economic growth. It's in fact an important sector within the Nigerian economy. It's the engine of Nigerian economic growth. And from a negligible 0.1% contribution to GDP in 1999, before the telecom revolution, the sector's contribution to national GDP has grown to as much as 10.8% as at the end of Q1 2020. Usage of data services has grown significantly through the uptake of digital solutions for people working at home and other virtual interactions. Today, telecom operators are experiencing rapid increase in data usage. This is occasioned by spikes in access to online resources for work, online resources for entertainment, education, for communication, and indeed for e-commerce. We have noticed spikes in adoption of digital services like Zoom, which we are using at present, Google Meet, Microsoft Teams, WhatsApp calls, and e-commerce in the country. These have created greater opportunities for new players in the tech ecosystem, especially those work from home solution providers and payment service providers. The boom has equally touched on what is happening in those areas. In fact, the ITU estimates that there were 4 billion global internet users at end of 2019. And Nigeria had just about 126 million of that global internet users, in fact, about 3%. But as at the end of May 2020, internet users have grown to as much as 142 million in Nigeria, about 13% growth within a space of 5 months only. While subscribers on broadband services were well over 77 million, and this is about 40% broadband penetration as at the end of May 2020. From available data, the growth in subscriber figures have also translated to growth in usage and revenues accruing to the telecom service providers in Nigeria. So the positive results in the industry can be appreciated within the perspectives of growth both in subscriber volume and in revenues from the services. And this impact is real and demonstrable. So the beauty of it all is that the government directly and indirectly benefits, especially from increases in taxes following increased activities in the digital economy. On a positive note also, telecom services running on national networks continued seamlessly despite the restrictions and challenges of the stay-at-home. As you may know, the NCC have always insisted that all these licenses must have sustainable disaster recovery plans. And these plans were quickly activated, and the COVID-19 pandemic enabled us as regulators to confirm that yes, these were all on the right track in this regard. You could notice that during the lockdown, you could use your ATM machine, you could do online purchases and make the payments. These were all made possible by the fact that the networks were all working during that time. So on the whole, the positive impact on the telecom industry has a spin-off effect on other sectors of the economy, like the banking sector and e-commerce that rely heavily on telecom infrastructure to provide their services. These services were kept running, and Nigerians were able to leverage on the infrastructure for virtual work, for play, and for social interaction. Right. First and foremost, let's look at the negative side, having considered the positive side, because it wasn't just all rosy. So first and foremost is the fact that telecom service providers have seen an unexpected shift in traffic pattern, with a drop in voice traffic being partially offset by increase in data traffic on the networks. This has been the experience in the last 4 months. Such paradigm shifts from voice traffic more to data traffic have obvious quality of service implications that are associated with it. It is indeed a fact that a good number of telecom consumers live on a daily wage. Hence, COVID-19 movement restrictions had a significant impact on their earnings and on their spending power. And this might appear to be probably the most obvious negative impact of the pandemic on the telecom industry in our country. So the effect of this could be seen from the reduction in the average revenue per user, or we call ARPU, for voice services. Whereas the average revenue per user on the voice services have been reducing, there are increases in the average revenue per user in the data services. And this is a reflection of the change in telecom traffic. And given the apparent business uncertainty, we are getting to fear that COVID-19 might negatively affect long-term investment decisions in the industry, particularly those investments that might have to do with network upgrades, network expansions, or even investments in new technologies, the 4Gs and the 5Gs technologies. So now, the industry competes for funds, no doubt, with other sectors, and until there's a more certainty with respect to the COVID-19 trajectory, it is natural that some investors may take a wait-and-see attitude with respect to their investments. And with broadband penetrations still relatively low in Nigeria compared to countries like South Africa and Egypt, obviously more investment is required in this sector. And once there are less investable funds occasioned by this pandemic, definitely it will affect the pattern of investment in this sector. Investments are needed in 5G infrastructure. 5G infrastructure is an infrastructure that is very critical for the emerging digital economy in our nation. And it is important that we have that infrastructure to unlock its transformative potentials in Nigeria. Let's look at the challenges. Just like I said, the pandemic brought with it some positives, it brought with it some negatives, and definitely it's posing quite a lot of challenges. For us as a regulator, we found it pretty difficult carrying out our field regulatory activities that might have to do with fiscal enforcement, verifications and system audits, which we have to do consistent with Section 29 of the Nigerian Communications Act 2003, which is the enabling act for the Commission. However, we have continued to ramp up compliance monitoring activities and consumer protection efforts with respect to billing and tariff issues, in addition to other areas affecting the interests of the consumer. Thus, we continue to ensure that consumers are not unduly taken advantage of, and that consumer complaints are promptly investigated and resolved so that affected consumers get proper redress. We recognize the fact that the demand for broadband services is expected to double within the next 5 years by 2025. Hence, we need to facilitate further investment in 4G technology, by telecom service providers to scale up capacity to address emerging quality of service challenges. There are also increasing consumer complaints with respect to data services. Some years back, when voice service was the norm, you hear consumers complaining of my credit is missing credit. But today, with the era of data services, what has become the norm in terms of consumer complaints is unexpected data depletion. There are issues of proper pricing of data services as one of the emerging complaints from the consumer. So voice service in our industry account for over 60% of revenues by the telcos. The implication is that most telcos stand the risk of financial vulnerability in the event that more mobile subscribers switch to digital services as we move along in the new normal. So we are concerned. We are concerned as regulators that gross industry revenues and even the contribution of the sector to national GDP may suffer some decline if there is no overall improvement in the COVID-19 situation. So the effect of investable funds for infrastructure upgrade and network expansion can only be imagined with what is happening today in the economy. The quality of service providers, the ability of service providers to meet with the quality of service obligation will not be left out in this quagmire if nothing positive happens in the next few months. And in fact, there's bound to be a spillover implication on corporate governance and overall regulatory compliance, which might be compromised at the end. Now, well, let's look at what we think is the way forward. So how are we geared towards addressing these changing dynamics of regulatory compliance? As with other endeavors, COVID-19 has challenged us as regulators to leverage on the powers of technology as tools for efficient delivery of our regulatory mandates. So we are putting a strong focus on consumer issues, remotely monitoring billing, most importantly, and tariff activities of the service provider. Data service has become the key service driving growth across industry. Hence, the Commission is engaging service providers to ensure that billing integrity of data services are not compromised. In fact, we're interested in ensuring that there is more integrity in the billing with respect to data services being provided by telcos. So as we move into the new normal, we would advance our regulatory focus with particular reference to engagement with telecom service providers to increase billing integrity and transparency in data services, as this will show up consumer confidence and trust in the market. And we plan to mandate service providers to create a platform that will give telecom subscribers the power to control and monitor usage of their data bundle direct from the comfort of their homes, of their offices, using their mobile devices. This is important, that there's some level of transparency with respect to the billing. We have achieved this in the voice services through the end of call notifications, whereby after every call you make, you get a notification that tells you the duration of the call, the cost of the call, and the balance in your account. We want to achieve the same thing in the data service. So we will take steps to improve on consumer education and awareness with respect to data utilization and control of applications running on their mobile devices. A lot of consumers don't know that every minute, once they put their mobile network on, every minute there are data, there are applications running on their handset, running on their line, and all that go a long way in taking their data bundle. So we intend to increase education in that regard and awareness creation for them to be able to control the applications running their mobiles. So the Commission is also stepping up efforts to commence implementation of what we call the InfraCo project. The InfraCo project is a project that is built on open access fiber network model, where license and the incentives will be given to privately owned companies in Nigeria to provide infrastructure that will guarantee equal access. It will be a shareable infrastructure with other telecom service providers at a fair and regulated pricing. So it will be a non-discriminatory pricing, and it's important that we fast track this project as soon as possible. Whereas the Commission in July 2014 launched a code of corporate governance for the Nigerian telecom sector, compliance to the provisions of this code remained voluntary until end October 2016. It was not until 2016 November that we mandated compulsory compliance on the code of corporate governance for the telecom industry in Nigeria. And this was done given the result of the survey that we carried out, which showed significant deviation from the key principles of the code. So effective from November 2016, we had mandated compulsory compliance to the code of corporate governance. The Commission has been monitoring and will intensify compliance with respect to the provisions of the code to foster good corporate governance practices in the Nigerian telecom sector. Now, it's also important to mention the fact that as much as possible, we recognize that the telecom companies operating in Nigeria, whereas they have regulatory obligations to NCC as a primary regulator, they also have secondary obligations to other regulators in the country. And therefore, what we've been doing is as much as possible collaborate with other regulators to make sure that as much as the regulatory obligations imposed on the licensees from the terms and conditions of their license, they also ensure that they comply with other obligations with respect to other agencies of government. For instance, the Lottery Commission, a lot of lotteries today in Nigeria, lottery services are run on the telecom infrastructure. So for every application for approval for lottery service that be run on the networks, we make sure we ask for approval from the Nigerian National Lottery Commission. This we do by an MOU, which we have signed with them. In the same case also, we have an MOU with Nigerian that is in charge of environment and safety with respect to telecom infrastructure. We have an MOU with them, and we make sure that for every BTS site, base transceiver station site, where the telcos hoist their antennas, for every site, we request and we make sure that there's an approval from Nigerian that has to do with environmental impact analysis. We've also recently gone into an MOU with Federal Land Revenue Service, FIRS, such that we could facilitate them to link up on an online real-time basis with what is happening in with respect to the telecom companies. The day-by-day recharge you do on your networks. Today, there's a link between the systems in FIRS and the systems for each of the telcos. And by so doing, they track the revenues accruing to the telcos and making sure that the value of the service thereon, VAT thereon, being assessed and paid by the telcos. So let's look at our conclusion. It's an obvious fact that COVID-19 pandemic has faced clear challenges on regulatory compliance and by extension, corporate governance requirements for the regulatory entities in Nigeria. And this underscores the fact that the world of regulatory compliance is always evolving, with requirements constantly multiplying. Most organizations think of compliance as a one-time activity. It's not. Whereas in today's environment, where rules of engagement are changing at a faster pace, and organizations expanding operations into new services. So the compliance landscape becomes very challenging and more complex and even expensive. So service providers must always see regulatory compliance from the prism. They must not always see regulatory compliance, because this is what happens. They must not always see regulatory compliance from the perspective, from the prism of cost associated therewith, but must realize that there are equally benefits that could be derived by obeying the rules of engagement. Hence, they must resist the urge to sacrifice regulatory compliance or corporate governance on the altar of short-term financial benefits or profitability, as this is not a sustainable business strategy. We have seen the fact that the level of regulatory compliance or even the level of corporate governance you see in the telecom companies in Nigeria is a function, is a color of their ethical value and corporate culture, and it's not a sustainable business strategy. So regulatory compliance impacts on overall corporate performance and long-term sustainability of any organization. Hence, we enjoy regulatory entities to embody regulatory compliance as an integral part of their overall risk management framework and design strategies to ensure compliance on a consistent basis. Ladies and gentlemen, I thank you for your time. This is the end of my discussion. I will look forward to questions. Thank you very much, and God bless.
Thank you very much, sir. Mr. Aka, Mr. Leonard Aka, we're ready for you.
Thank you. Thank you very much. I will want to start by appreciating everybody, particularly the Society for Corporate Governance, for organizing this this exercise, because actually it could not have come at a better time than now. Sorry, I'm not seeing others.
Okay.
Am I sharing from my own end? Hello?
We can see you, sir. We can see you. Please
Yes,
go ahead
okay.
and share your screen.
Okay, I continue.
Yes, sir.
Yes,
We can see
please
you.
share your screen.
Okay. Okay. Sure. Okay. Okay, fine. Once more, thank you, everybody. I want to especially thank Society for Corporate Governance of Nigeria for this opportunity given to us to come and let you know what we are doing here from the insurance perspective. My paper, I will, sorry, the control of this, is it from my end? Yeah. Okay, my presentation will take this format. Regulatory compliance and key characteristics, changing regulatory dynamics in the insurance industry. Then I'll take the conclusion. Regulatory compliance. Basically, I would say the regulatory compliance refers to the observance of laws, regulation, guidelines, circulars, and policies issued by the regulator, in this case, the National Insurance Commission, as far as the insurance sector is concerned. And the insurance operators are bound to go by these laws and regulations. And of course, the sustainability of any operator is your ability to comply with these laws and policies as it is. Then by complying with these laws, regulations, guidelines, as the case may be, we definitely, we do handle this, or we pretend this by looking at the Nikon Act, the Insurance Act, your strict compliance of the operators to these laws. Of course, again, the prudential surveillance, market conduct. The key features, features of effective compliance regime. Basically, the key features of effective compliance regime in the insurance sector has to do with operators having approved good corporate governance framework, having designated officers, we call Nikon relation officer or compliance officer, and of course, also having a dedicated department. Ensuring effective training and awareness for these respective officers. Establishing effective lines of communication. These issues will be discussed in detail later in the presentation. Monitoring and auditing. The changing regulatory dynamics. Changes in regulatory requirements are caused by a host of factors. And I can tell you is right now, a lot of things have affected the insurance sector. I would maybe take because of time, of course, I had to limit my presentation to some of the very key ones. One on the top of the list is the 2008 global financial crisis, coupled with the recent economic recession in the country. Inability of some insurers to honor their contractual commitments, increase in fake insurances, impact of COVID-19. And in our response as a regulator to some of these major challenges, we embarked on recapitalizing the operators. And for COVID-19, a lot of forbearances were given to them. Of course, I'll take them in details in the course of the presentation on returns, reinsurances, license renewals, and etc. Nikon Insurance Policy and Licensing Portal, IFRS 17 on insurance contracts, new frameworks for cyber risk and security framework, etc. these are the. Now, on recapitalization, basically, this was the issue of recapitalization has been on for some time. Recall that the last recapitalization that was done in the insurance sector was as far back as 2005. And if my memory is not failing, you can remember that as at 2005, the exchange rate for naira to dollar was about 130 naira to a dollar. Today, it's over 400 naira to a dollar. And there are insurance, of course, insurances, some are in naira, some are in foreign currency, dominated. And then another thing we did on the recapitalization was to ensure, of course, basically it was to ensure that the companies are adequately capitalized. Of course, with the capitalization, that they will be made more liquid and they'll be able to address the issues of asset and liability mismatch. One other area that is need to be mentioned is on the issue of local content capacity, and because as you are aware, the local content law also affects insurance, meaning there are all insurances to start with are domesticated, meaning that every insurance is in Nigeria for any assets in Nigeria should be insured in Nigeria. And for all that to happen, considering the fact that some of these things are, in hard currency, dollar, pounds, and all that, the capital of these companies need to be revisited for them to absorb what has been even allocated to them by law. Now, again, on the recapitalization, because of COVID, initially the capitalization exercise was supposed to end by December 2020. But because of COVID, we have now segmented it into two phases because it's so clear to us that the operators were having a hell of challenge, in meeting up with the deadline of December 2020. So right now, it's now into two phases. The first phase will be December this year, and meaning that all companies that intend to recapitalize must meet at least 50% of the requirement for recapitalization by December this year. And of course, the balance should be 30th September 2021. The insurance and reinsurers are expected to satisfy the required minimum paid up share capital, deposit funds generated into escrow accounts in CBN, satisfy the statutory deposits and other relevant fees, comply with enhanced prudential guidelines and standards to ensure prudent and effective utilization of mobilized funds for post-recapitalization. COVID-19 regulatory forbearances. Like I did say, the COVID has brought in a lot of challenges to everybody. And the commission, the National Insurance Commission, is in full know of these challenges as it affects our operators. Hence, the normal, what we now regard as the new normal, and they stated the need for regulatory forbearances aimed at ensuring quick recovery and sustainability of the Nigerian insurance industry. This was to ensure that availability of insurance services and to protect insurance policyholders. Hence, a couple of palliatives were extended to them. Activation of business continuity, change in the renewal cycle from 1 to 2 years. You are aware that some operators, such as the insurance brokers and the insurance agents, their certificates, they are issued their annual certificates, licenses to operate. Meaning that at the end of each year, they're supposed to renew their operational license. But because of all this, what is happening right now, the Commission has now extended the renewal cycle to 2 years to give them enough time to do the needful. Now, step down some renewal documentation requirement for intermediaries. Even some of the documents that they require for the renewal of their papers. We have stepped both the timing, going to submit and all that, because before now, of course, the Commission used to be very strict in terms of their compliance with this renewal documentation issue. But now that has been stepped down. Consent to reinsure policies on the existing basis and use and file approval. Let me explain this more, because this is very key. I've already mentioned to you that by the Insurance Act of 2003, all insurances in Nigeria are domesticated, simply meaning that you cannot insure yourself, your life, your properties, wherever outside Nigeria without, first of all, getting approval of the National Insurance Commission. Now, if you do that, of course, the law provides heavy sanction. Now, the challenge or what is associated with this, and in consideration of the COVID-19, the Commission have now done a lot by saying, look, you can renew on existing basis. For example, during the first 3 months, particularly when the COVID, from March, when it was quite tight that people were not even coming out, going to offices, we allowed them just renew on existing basis, meaning that, look, don't even come to us, just renew, because some of these policies, you cannot terminate them, more so when the insurers require this cover more now than ever before. So we simply tell them, look, renew on existing basis, then you can come back to us later. Now, extension of deadlines for submission of regulatory return. I've also talked about it before now. The operators are given more time on to make their returns. Sometimes 1 month extension, they will not be penalized if they submit late and all that. Nikon insurance policy and licensing portal. The issue of portal has been an issue with us for some time, and but now it's in the front burner. The portal is a digital platform that will capture all insurance policies issued in Nigeria. It will generate a unique policy identification number for all issued policies. I'll tell you, one of the major advantages of this is that even fake insurances can be checked. Right now, a lot of Nigerians knowingly or unknowingly buy fake insurance. But now with this portal, every policy issued will have a unique identifier, a number. With this, you find out if you don't have, nobody needs to tell you that what you have is a fake one. Insurance institutions are required to adopt appropriate processes and IT infrastructure for seamless handshake. So on the part of the insurance institutions, they also are required to ensure that their own IT system is quite seamless in terms of interacting with what the regulator has. This is expected to strengthen the Commission regulatory effectiveness and improve real-time interface with the industry. IFRS 17 on insurance contracts. This IFRS is standardized insurance accounting globally to improve comparability and transparency. Of course, I may need not to speak so much on IFRS 17 because I'm aware that this does not just touch the insurance sector alone. And prior to this, there have been this issue of countries, different regions having their own accounting standards. But now this uniformity that is being brought in the recent times, is helping to have a standardized accounting, so that anybody here, even outside Nigeria, wherever you are, when you pick the financials of any institution, you can easily interpret and understand without asking so much questions. And I went further to say that the IFRS 17, which of course replaces the IFRS 4, which this 17 will be becoming effective in 2023. Its scope includes insurance contracts and reinsurance contracts held by insurance, investment contracts with optional participation feature issued by insurers, some fixed fee service contracts. Key requirements of IFRS 17 includes recognition of time value of money, presentation of insurance service results separately from finance income, combination of current measurement of future cash flow with recognition of profit profit at the period, accounting policy choice regarding recognition of insurance finance income or expense, a profit or loss, or some of it in other comprehensive income. Now, new frameworks, which these are also things the Commission have initiated to tackle some of these challenges that are facing our operators. The regulatory landscape will continue to evolve in response to the changes in the business environment. The following are regulations aimed at aligning practices and regulatory compliance with the realities of our time. RBS framework, that's risk-based supervision framework, and our own risk assessment framework. Corporate governance guideline for insurance intermediaries. I'm happy again, my brother from Nelson will be speaking definitely on the issue of corporate governance, because we are actually collaborating with them on making sure that our sector complies with the current corporate governance. Of course, you recall that prior to now, every sector, all the different sectors, particularly the financial sectors, each of us had our own code of corporate governance. But now we have only one single code, wherein other sector regulators are supposed to now come up with their own corporate governance guideline. So that for the insurance sector is completed and will soon be released. Revised claims management practices, cyber risk and security framework for solvency control and intervention levels, recovery and sustainability framework for insurance institutions, insurance industry IT framework. All these frameworks are being now issued by the Commission just to address the challenges we are having. Now, in conclusion, an effective compliance by an operator is imperative to its continued existence. It helps to avoid violation of laws and regulations with attendance penalties. It is very clear, and it should be known by everybody, that the moment any operator violates any of these laws, regulation, policies issued by a regulator, of course, there is usually an attendant penalties. And it is not usually the burst, it's not even the quantum. The quantum may not be the issue, but for you to have it in your record that you're being penalized or sanctioned by your regulator, definitely is not a plus for you. Investors, some investors, particularly those, foreign investors, do not like to approach any operator that is always in violation of the regulators' guidelines. Reduce reputational repercussions. Of course, like I just said, the issue of reputation, because the moment you are in the habit of violating laws, regulations, as corporate governance and all that as issued by your regulator, definitely your reputation will not be that high. Making the operator to be an investor's delight. In the same vein, if you are quite compliant, with these guidelines, laws, and policies, you find that investors will definitely like to deal with you because they feel that there's a future for such an organization. Any organization that really operates in line with laws and rules guiding a sector, definitely that organization has a future, because any issue that could affect its continued existence are usually nipped on the bud. Prolonged life of the operator, of course, the same thing I've just explained. Making an operator a global player. Yes, making is just like talking about being an investor's delight. When you operate in line with the law, definitely I can assure you that even foreigners will like to invest in such a company. today in Nigeria, a lot of foreign investors, as a matter of some are even saying they have invaded the insurance industry. There, a lot of them are here in Nigeria, and one of the attractions is compliance. They usually rush those companies that do comply with rules and the regulations as issued by the insurance regulator. So I think because of the limited time we are given, the paper is quite brief. I will be stopping at this point, and I believe maybe during the question and answer session, I will be in a position to possibly address some other issues that were maybe not covered by this short presentation. Thank you very much.
Thank you very much, sir. Mr. Abdul Kadir Dahir, we're ready for you, sir. Could you unmute your microphone, sir?
Okay.
Okay, perfect. Yeah.
Okay, so good afternoon all. Thank you for having me on this discussion to talk about a very important and very topical issue. I will first of all start by thanking the Society for Corporate Governance for organizing this seminar. Thank also my members of the panel from Nikon and National Communications Commission, and of course the Financial Reporting Council. The Commission is very concerned, like all regulatory bodies, on the effect of the pandemic. And so this afternoon, I'll be sharing some of our some perspective on what the Commission has been doing with regards to ensuring that the pension industry remains safe and stable, and that we do not have any adverse consequence as a result of the pandemic. So I'll be talking on supervising the new normal, regulating the pension industry in the face of the pandemic. The table of contents.
I'm sorry, sir. Could you share your screen, sir? You're not sharing your screen.
I thought I have done that. Okay.
No, sir. And if you could speak up a bit louder, sir, I would appreciate that.
Okay.
Okay. So perfect. Yeah.
That is okay.
Yes, sir.
Okay, fine. So I have a brief table of content there. We will have an introduction. We'll talk about the impact of COVID-19 on the pension industry. Other sectors were also affected. We'll talk about some of the measures that have been taken by the Commission. And of course, we'll talk about some of the emerging risks, which are also of regulatory concern, and a brief conclusion. I think the point has to be made that the pandemic is essentially a health crisis, even though it has now become a major economic and social crisis. As at 13th of July, the Johns Hopkins University is saying that globally we had about more than 13 million confirmed cases and about 573 deaths. In Nigeria, we had about 33,000 confirmed cases as at the 13th of July, with a little above 700 confirmed deaths. Like I said, this health crisis has now evolved and become really an economic crisis. And as we all know, even before the crisis, the Nigerian economy was grappling with a very weak recovery from the 2014 oil price shock. As at 2019, GDP growth was at about 2.3. This really was the background that COVID-19 met the country. And we all know that low oil prices had impacted on virtually everything. And the pandemic has finally aggravated this situation. Also, because of all these issues, we have seen that all the components of aggregate demand, which is a key consideration for pension fund administrators, was on the decline. We had declining consumption. Basically, we all know during the pandemic, especially when lockdowns were enforced, we had restriction of movement. There was basically poor expectation of income because people were not working. And of course, erosion of wealth. All this combined to drag down consumption. Investments were also declining, basically because of uncertainty. When you don't have uncertainty about what the future holds, investors tend to hold back and not to take certain decisions. And of course, poor expectation of future profitability. We also had declining export. Net exports were declining because we had disruptions in supply chains for export. The borders were closed, especially for non-essential trade, and there was low demand at the global level. So all this combined to drag down aggregate demand. So side by side with this economic challenge, like I said earlier, we had social disruptions, businesses, government offices, restaurants, parks were virtually closed as society tried to tackle this virus. And survival was the only game in the town. You know, survival for individuals, for families, for communities, and for businesses. That had forced people to basically rethink how we are going to do things moving into the future. And it was good for some businesses, like it was the first speaker said, was in some cases it was very good for some of the telecommunication industry because everybody had to work remotely and things like that. But the net effect is that we have to rethink how we do things going forward. Now, for the pension industry, the investment climate became very fluid. And pension fund administrators are essentially asset managers. And investment is a very important element of pension management, which really has three phases. You had the accumulation, when basically you register, then you have the accumulation phase where people save. And because of investment income, they build a reserve, which at the accumulation phase, they will draw down when they eventually retire. So the investment climate became very fluid because of a lot of uncertainty. And pension funds had to struggle to find opportunities while maintaining value, because while you want to go out there and invest and make returns, you also don't want to take unnecessary risk. And as we said, businesses, companies, everybody, including governments, were suffering as a result of the effects of COVID-19. Also, the issue of the lockdown and the physical distance rules limited the ability of pension fund operators to even service their clients. People cannot walk into the office of a pension fund administrator to update their records, to open accounts, to do basic things that we go to do in this company.
I'm sorry to interrupt you, sir. You're not
your
screen. You're not sharing the current slide.
Oh, okay, fine. Sorry. Yeah, so I think this is why I am. So like I said, the lockdown and the physical distance rules also limited the ability of pension companies to service their clients. So we're talking about active workers that are saving for their retirement, and also for retirees that have to be paid their pension regularly. Importantly, these companies cannot even go out to do their marketing activities. Pension clients, there needs to be physical interaction. People go to businesses, to offices, to market clients, tell them what they can do, and sign them on. But when everywhere is locked down, or when there are physical distance rules imposed, that limited the ability of even these companies to grow their business. And virtually business development activities came to a stop, and with that, all the projections for growth in 2020 for the pension industry also went out through the window. For us as the regulator, we could not do our on-site activities. Basically, the law provides that on a yearly basis, the National Pension Commission must go out and examine all licensed pension fund operators at least one in a year. This is to confirm that they are carrying out their activities based on the conditions that are attached to their licenses. You also want to corroborate all the information that you receive offsite in terms of the financials of the company, and reports regarding meetings of the board, meetings of the committees, meeting of the investment strategy, and also how they are managing their risk. So the Commission could not do those examinations, obviously. Other activities of the Commission, which involves meeting with operators, attending AGMs, inspecting branches and approving them, all those essential elements of supervision had to be put on hold. So it really if the pandemic, as it were, really impacted both the regulatory aspect of our work and as well as the operators. The Commission cannot regulate as effectively as it wish, and the operators cannot do as well as they cannot continue their business as they would want to do. As a result of that, when the lockdown was eased, the Commission had to meet and look at how does it continue to ensure the safety and soundness of the pension system, and as well as making sure that each and every client that has a pension account, when he retires, he collects his pension as and when due. So really, how do we ensure that these two twin regulatory objectives, one of ensuring stability and soundness, and second of ensuring fair returns on pension assets, are achieved? Consequently, the Commission had to ensure that it activates its contingency plans. And we started working remotely. Pension fund administrator, hitherto, business continuity was a major element that the Commission insisted that each operator has in place. So the issue of backup of activities, the issue of both offsite and onsite, the issue of having an effective business continuity arrangement where PFAs can relocate was something that was seriously enforced, and this was something that came to bail us out during this time. So the Commission was able to continue working remotely. Pension fund administrators were able to continue working remotely. Investment was not affected because the banks were also able to continue working remotely. So as maturities were coming in, PFAs were taking investment decisions on whether to terminate investments or to roll over. Most of the government bonds were long-term in nature, so we did not have any disruptions because they were already running investments. And as far as the contributions that were coming in, PFAs were able to invest those funds without any problem. So we had to think of how do we strengthen supervision? How do we make sure that we continue to supervise and make sure the financial system, as the pension financial system, remains sound? The first thing we did is to strengthen our offsite surveillance. Before now, PFAs sent regulatory returns to us through a platform we call Risk Analysis Management System, RMAS. They send daily, monthly, quarterly, biannual, and annual reports. Obviously, because we cannot go to their offices to conduct any on-site examination, we have to strengthen that. And strengthening that involved, one, introducing additional reports. There are reports that ordinarily we were not receiving, but because we have to know the operational and financial condition of these operators, we had to introduce additional reports. And these additional reports are provided by compliance and risk management functions. These are control functions that we had identified early last year that needed to be strengthened. And so we made sure that these functions had the right money levels. We made sure that qualified people are employed and approved by Commission to man these functions. We made sure they had adequate degree of independence from management to do their job, and also made sure that their reports actually go straight to the board of directors so that we can ensure effective board oversight. So these control functions, we added another layer of reports which we require them to send to the Commission. In addition to that, internal audit and control functions are not ordinarily a function that reports to the Commission. But because of the pandemic, we also insisted that internal audit must send their reports to the Commission. And this report is not on what they want to write. We asked for specific information, so we provided templates for which they will render this report. In addition to that, we also introduced new reporting templates, which were designed to provide us information that otherwise we will only get when we are physically on the field of inspection. So, to compensate for not us being able to go to the site of the PFAs, we ask for additional information on things that ordinarily we only get when we are on site. We also increased the frequency of reports. Reports that are quarterly became monthly. We also increased the tempo of communication between the Commission and different levels of the operators. So our communication with the board, asking questions, asking for clarification, increased. We also increased our communication with the management staff. This is all in a bid to fill the gap between our ability to go to their premises and the information we are receiving from them. So basically, this information is reviewed offsite. We do analysis, ratio analysis, and the like, to determine financial soundness, to determine if the PFA needs, if the Commission needs to intervene in any operator. We also started, this is something we have been using, but I think we have brought it to the fore and raised its level of importance, which is basically the use of supervisory ratings to target pension fund operators that need higher level of regulatory attention. When we go for examination, which is basically risk-based, all the regulators in the financial services industry use RBS now. We have 4 levels of supervisory ratings: high risk, above average, moderate, and low. So for all our operators that are within the risk bucket of high and above average, these obviously are operators that need higher level of regulatory attention. And based on that risk rating, our interaction during this COVID time is more with those operators that are within this risk bucket. Finally, the Commission had also provided some level of accommodation for PFAs that violated investment limits. The investment regulation clearly specifies limits that that you cannot go over for each individual asset class. But because of the pandemic, there has been flight to safety by most PFAs to fixed income securities, as it were. The Commission, in recognition of the effect of COVID-19, had given some accommodation and had not sanctioned anybody for taking that action. In addition, the Commission is working on a number of things to complement its regulatory activities with regards to the COVID. One, a framework or a framework / guidance note on virtual meeting. Before now, virtual meeting is not something that we allow, but because of the realization that people are working increasingly offsite from their houses, from home, there is a need for us to do something on what is the minimum expectation from us as regulators if an operator is to say do a board meeting virtually. How do you record the minutes? What are the minimum things you expect for that meeting? So that is something we are working on, and very soon, in the next few weeks, that will be ready. The Commission is also reviewing its branch and service center requirements. It is a requirement of the law that any operator that wants to open a branch or a service center anywhere in the world, in the country, must have regulatory approval. That will appear to have given some emphasis on brick and mortar. You need an office, a physical space. Part of what the pandemic has thrown out is that going forward, that may not be. Accessibility using digital media, some online approach may also be able to complement, so that while a lot of people, may be comfortable working into an office to interact their business, the younger people, the Generation X, are very comfortable to interact with their laptops, their phones, and also get the same level of service. And in recognition of that, the Commission is looking at reviewing some of its requirements. The third issue that the Commission is also looking at has to be back office process optimization and automation. This is something that we are going to, in a very short while, roll out certain requirements that will facilitate the adoption of these measures in our industry. While we move and change the way things are done, because the truth about it is that things will never go back the way they are completely. Virtual meetings, working from home, are things that will not likely change. So side by side with these issues, as we try to adopt, the Commission has noticed that it is facing certain risks. The first one is that when you work from home, there are certain efficiency level. You have connectivity issues, depending on where you are. So can you work effectively? If you are going to service a client by working from home, how effective can you be? In your office, we can regulate the kind of connectivity we want, the kind of infrastructure we want you to deploy. But when people work from home, how do you complement and make sure that they have the right tools to work effectively from the house? And the second issue has to do with the issue of information security, cyber security risk, and the like. The more we take our businesses and our personal lives online, the more we are going to be exposed to this risk. Yesterday, Twitter had a serious security breach. Accounts were hacked. So you can, if you're hacking the accounts of Barack Obama, Bill Gates, and Jeff Bezos, you can understand the risk that we are all exposed to. So in conclusion, I want to make the point that COVID-19 may be a short-term problem. Hopefully, sooner than later, a vaccine will be found. But the scale of the crisis has shown us that something that is health-related can dovetail and have significant impact on the life of a country, a business, all around. And it's really like a black swan event. As regulators, we must be up and doing. As compliance professionals, we must be up and doing to see how this will impact. We must be nimble enough to change our processes and our systems to be able to accommodate. At the end of the day, the most important thing is to run our business with a high level of integrity, high level of disclosure, and to make sure that all the I's and the T's are dotted. So the Commission will continue to, as a National Pension Commission, will continue to concentrate on the short-term effects of this pandemic while the long-term issues are not taken for granted. I will want to end here. I also, before I end, once again thank the Society for Corporate Governance for allowing us this period to share some of our thoughts. If there are any specific issues, I think we'll take them at the question.
Thank you, sir. Thank you, Mr. Dairu. Dr. Anumaka, we'll take your session now, sir. Please unmute your microphone, sir. Okay, thank you, good to go.
Can you share the slides? I can't see it.
Okay, I can share. Okay.
Yep.
I'm sharing now, sir. Can you see my screen, or would you prefer to share from your end, sir?
No, share from your end. Can I go ahead now?
Yes, sir. Please, sir.
Yeah, please, participants, I bring you good tidings from Financial Reporting Council. And I thank especially the Society for Corporate Governance for organizing this webinar, especially at this auspicious time. But I urge the participants to bear with me since I'm the last speaker, because I know you could think that I've been bored. My discussion is just a very simple one because my colleagues from other regulators, other sectors have said some of the things we are doing. So one of the essence of regulatory can you share? Can you move? Hello?
Yes, sir. I'm moving, sir. I've moved, sir.
One of the essence of regulatory compliance in business is to promote good corporate governance and best practices. And the emergence of COVID-19 has brought about operational challenges to businesses and also to regulatory requirements. But however, COVID-19 is not something we think that can just be eradicated like that. And therefore, what regulators have tended to do is to step up to provide temporary relief from the constraints, and then also provide accommodation to challenges under the current circumstances. We will all note that these are indeed challenging times. They are challenging times. The regulatory compliance in itself describes the goal that organizations aspire to achieve. Can you move the slides? Hello?
Yes, I'm moving it, sir.
Okay. Regulatory compliance describes the goal that organizations aspire to achieve in their efforts to ensure that they are aware of and take steps to comply with relevant laws, rules, and regulations. And we discovered that the major areas of compliance affected by this COVID-19 pandemic include financial reporting, corporate governance, auditing, workplace health and safety, even employment itself, and data privacy. Therefore, entities need to consider the following corporate governance areas to accommodate the effects of this pandemic in their regulatory compliance. Can you move? The roles and responsibilities of directors in this circumstance, in this changing dynamics. We think that during this period, the boards should be reviewing management succession. And they also think of reviewing succession along the board's composition. Also, the board should be thinking about risk assessment, risk management, and business continuity. By that I mean, you know, the risk policies and the risk appetites and limits for now, should be looked into by the board on a dynamic basis. And then the board should also enhance communications with the management. They should enhance communications with management on a regular basis, unlike during the normal situation. And also they have to reassess long-term corporate strategy. I think one of my colleagues mentioned it. This time around, we'll be looking at short-term and mid-term rather than long-term, you know. And within the changing dynamics is that the directors can hold virtual meetings, especially where the following areas are met. One, they have to tinker on their articles of association regarding the statutory 14-day written notice for board meetings. They have to tinker on them. And then all directors must receive notices of the meetings. And since it is a software thing, it's very easy to send such notices. Then video conference facilities for meetings like the one we are having now to enable the directors to debate and to vote and also offer dissenting views, just like what they do before this time. And also we'll ensure that attendance at the meeting must be taken. And of course, the necessary quorum requirements must be formed. Then also during this period, most of the annual general meetings are holding remotely, and CAMA grants that leeway for having virtual AGMs. I remember, I think the first company that did it was the ETB. They held this, and then most of the top blue chip companies had done their annual general meetings. This time around, not physically. And then also there has to be continuous engagement with shareholders by the board and management so that they don't lose sight of what is going on in their company. I want to talk about Nigerian Code of Corporate Governance 2018. We all know is a principle-based code, which means that it's judgmental. It's not a rule-based code. And the philosophy of our code is apply and explain. What it means is that you have to apply the principles and give some explanations for what you have done in your business for that period. It's also flexible and scalable. Flexible in the sense that you apply them in a wide range of circumstances. It cuts across boundaries of companies, and then it's scalable in the ability to apply to companies of different sizes and different types and maybe their growth phases. In all, the SCGN 2018 has 28 principles, and they are meant to be adhered to in the course of their company's corporate governance journey. And they are embedded in that Nigerian Code of Corporate Governance, 247 recommended practices, and they have to be applied according to the judgments of the board. And because it's a principle-based code, nothing precludes you from bringing in new explanations for what you have done, so long as the stakeholders are aware of what you have done. Like my colleague in Nikon has mentioned, we have engaged all the sector regulators. And what we have now is one national code, which is called Nigerian Code of Corporate Governance. And we resorted to engaging all the sector regulators to turn their previous sectoral codes into guidelines. And that journey had started, and we have virtually concluded it. But what the code provides is that the agencies will issue the guidelines with the assistance of the FRC. And what the guidelines will do is to address specific corporate governance matters in their various sectors. And we noticed that corporate governance practices may have peculiarities and unique or prudential things like in the banks and the insurance companies. So they are now embodied into what we now call corporate governance guidelines in those sectors. Because it's not possible that NCCG 2018 will capture all the prudential or sector issues. Like I said before, we have engaged all the sector regulators, and we are in the process of finalizing all of them. And they will, in no time from now, all the sectors, that's CBN, Nikon, SEC, NCC itself, and PENCOM. In fact, PENCOM had even issued their guidelines to their operators. But I'm sure that in the next coming weeks, virtually all the guidelines will be churned out to their sectors. I want to talk about the compliance with NCCG 2018. Quite recently, say May 28, we issued a press release. What it did was providing guidance on reporting on the code. And we are telling you now that you can download it from our website, www.financialreportingcouncil.gov.ng. And what we try to exhibit in that press release is the timelines for the years 2020 and 2021. You remember that the reporting commenced January 1 this year, 2020. So if your financial year ends in 31 January this year, what it means is that you're expected to turn in your corporate governance reports by the end of this month, July. For those of them, for next year, 31st January, for example, what it means is 30th April 2021 is when you are going to turn it on, and so on and so forth, up to December this year. If it is December this year, then you know you have up to March 31st, 2021 to do your reporting on corporate governance. Aside the press release, we also released the reporting templates, because what we did, or what we see in the marketplace, is that a lot of us, go to the next slide, a lot of us had reported in varying forms, just like what we did on this Nigerian Code of Corporate Governance. We tended to look for a uniform system of reporting. So that's why we released the template. Yes, that slide. We released the template so that it will be for general applicability and everybody may have to be on the same page. But what we are trying to do now is we are developing a dedicated website or web portal, and as soon as it's ready, every of these things will be put into that portal. That web portal, apart from being a reservoir for corporate governance resources, we host these reporting templates. So what it means is that the portal will take all information regarding corporate governance, and then as well as these templates. While this is in process, we had hosted the template for now in the council's websites. And like I said before, it was released also on May 28, 2020. So you can download the templates from our websites, which is the same website I had mentioned before, www.financialreportingcouncil.gov.ng. Next slide, please. That template will provide reporting questions that are based on those 28 principles embedded in that Nigerian Code of Corporate Governance. And it requires that you explain what is in the principles. So it's arranged in such a way that from principle 1 to principle 28, and that template was developed by a committee made up of stakeholders, especially the sector regulators, so that everybody will be carried along. And at the end of it, that report must be signed or endorsed by the chairman of the board of directors, and then the chairman of committee responsible for governance. On the management side, the managing director, chief executive officer, and the company secretary, or those who have chief compliance officers will endorse the templates, the reporting templates. So those completed reports are to be forwarded to their sector regulators. Please, can you go back? The completed reports will be forwarded, number one, to their respective sector regulators. If you are in the insurance industry, you have to send it to Nikon. If you are in the banking industry, of course, it's CBN. If you are in pension, then it's PenCon. If you are in telecoms, it goes to NCC, and then if it is a listed company, of course, it's SEC and the rest. Then the second place you will submit is the Financial Reporting Council itself, and we have the emails you are going to use there. FOOKEDIRN, Financial Reporting Council.gov.nigeria.ng, sorry. Then we also have NCCG 2018 reporting at Financial Reporting Council.gov.ng. Then for listed companies, they have to submit also to their respective stock exchanges on which they are listed. Then additionally, a completed copy of that reporting template should be hosted on every company's investors portal. and you will hold it for not less than 5 years for the public to continue to see. I wish to conclude that what we have done in this country is like, number one, harmonizing all pockets of corporate governance codes that were existing in this country. And we have unified them into one document for general applicability. And secondly, the onus of coordination of corporate governance matters in Nigeria now is with the Financial Reporting Council, both for public and private sectors of the Nigeria economy. In fact, this is enshrined in the FRC Act. We have also attempted to institutionalize the highest standards of corporate governance, best practice in Nigerian companies. That was why the national committee that handled the development of that code did a wonderful job by incorporating and holding all manner of engagements up until it was issued. The NCCG code also will promote public awareness on essential corporate values and ethical practices, which is very important, and also will enhance integrity of the markets. Of course, the essence of NCCG code is to protect the investor's rights. If you don't have a very best practice code, no investor will bring in his or her money into this economy. And what that code has done is also to provide adequate corporate disclosures and enhancing sound broad practices. I think I may stop here and I'll be ready to answer your questions as they may come. Thank you very much. Thank you.
Thank you very much, sir. Mrs. Ilva Inko, the Chief Executive Officer of the Society, will be anchoring the question and answer session. We have received some questions and she will take the session.
Thank you, Adetayo. Good afternoon, everybody, and thank you very much, our speakers. You've done noble this afternoon. We have quite a number of questions here, but we'll try and take as many as we can because of the time we have at our disposal. And so our first question will go to Mr. Aka, Mr. Ephraim. We are please required to shed more light on the often discussed negative effects of 5G on human beings. Is it good to have or not? I know we heard a lot of things about 5G, so please, Mr. Okoneya, can you please shed some light on it? 5G, is this something we should be excited about? Mr. Okoneya, are you there, please?
Yes,
Okay.
I am, madam.
Okay, sir. So somebody wants to know this 5G thing, is this something we should be excited about, or should we be worried about it?
Of course, to be honest with you, there is nothing to worry about 5G and health. These are misconceptions.
Okay.
5G has a lot of transformative potentials for for the economy.
Okay.
And as we speak, South Africa has launched 5G, just in Africa. I mean, bringing it closer, just like 5G has been launched in China. So it has transformative potentials for the economy. The health fear, the fears with particular reference to emissions, electromagnetic field emissions, these are all unfounded. The antennas for 5G the health effect of 5G is not much different from what we have for 3G or 4G, which we have in place now. But we are launching more of sensitization and stakeholder engagement to allay these misconceptions in the mind of Nigerians. The answer is simply that there are not worried about.
Okay,
These are
great.
technologies that are coming to change lives in Nigeria.
Okay, another quick one for you. What has NCC done to support telecom consumers in view of COVID-19? Emphasis on what has been done rather than what is in view, as you have emphasized. What have you done as a corporation?
Good question. Well, let me start by putting this point quite clear. The primary responsibility for service provision to telecom consumers lies with the mobile network operators. What NCC is a regulator, a referee, is there to make sure that the interests of consumers are protected. They are there to make sure that consumers are not unduly exploited. We are there to educate consumers on their rights and privileges. The primary service provider to the consumer is the telecom regulators. I mean, the telecom operators. And we are aware that each and every telecom provider has extended tremendous support to their consumers during this time. For instance, between the months of April and June, I'm aware that MTN gave out free SMS to consumers on their network. About 4 billion free SMS was given out by MTN to their subscribers. In the same way, Airtel has given about 1 billion free SMS within the same period to their customers. Again, Glo is giving some free data credits to subscribers on their network. So the point remains that NCC has no direct service provider to consumers. Ours is to make sure that the consumers are protected. But service providers whose responsibility it is to give back in return to their consumers during this time, we are aware they are doing quite a lot and will even do more. Thank you.
Thank you very much. Mr. Akkad, I'm going to 2 in 1. What measures has Nikon put in place in curbing fake insurance and in sensitizing the public on the measure? And secondly, is Nikon considering a clearinghouse? Is Nikon considering a clearinghouse for insurance policies so as to obviate the counterparty risks of fake or non-performing insurance policies? Please unmute your mic, sir. Did you get the 2 questions?
Yes, thank you. I think the first one, you're talking about fake insurance.
Yes, sir.
Nikon doing to checkmate fake insurance, particularly at this period.
Yes, sir.
Yes, thank you very much. As a matter of fact, the issue of fake insurance has been in existence for quite a long time, even prior to COVID. And one of the first things the Commission always tell people, don't buy insurance at licensing offices. Go to insurance offices and buy your insurances. Do not patronize quacks that do not, their own office is the portfolio they are carrying. do not buy insurance on the road. Go to offices. I don't see somebody who will go to, you want to change money now and you're doing that on the road without going to a bank or something like that. So the first thing, what we are doing, when I was talking, I'm going to take the two because both of them are almost on the same issue of clearinghouse again. I mentioned the issue of portal, having a portal. This portal is more or less going to be that clearinghouse because the portal will be coming up, any policy issued now will be having a unique identifier, a number. And that number, the moment you get it, it shows that you have a genuine certificate of, policy. Even before now, in some classes of insurance, like in motor, for example, prior to this time, even the operators on their own, through what we call Nigerian Insurance Association, have the NIID. If you buy your motor certificate, you can, on your own, including the police, anybody can check, confirm, just like when you buy drugs these days, you scratch and, check whether it is a genuine drug or something. Such, again, is there already, like I said, in motor. And we're going to extend that even to marine and other classes. And the moment this portal comes up, and which I believe in no distant time it will be up and running, that will again help so that it's like a clearinghouse to check, to confirm the genuineness or otherwise of any policy one is buying. And like I've said, do not buy, or people should not patronize insurance at the licensing offices. Thank you.
How can the challenges in regulatory compliance seek to improve economic development from 5-hour economy to 24/7 economy? Also, what security assurance do we have with regards to data protection? Mr. Okone.
I didn't get the first question.
Okay, no, this is for Mr. Okone. How do you carry out a surveillance and intelligence gathering exercise during this partial lockdown? Taking into consideration, sorry, the question has disappeared. Okay, but how do you carry out surveillance and intelligence gathering exercise during this partial lockdown, taking into consideration the COVID-19 rules? Mr. Aka, you can help us with that. Mr. Wokoneya.
Let me comment on that. For the insurance sector, we are, first of all, our inspection, we have two ways we monitor activities of our operators. We have what we call on-site and off-site. Off-site is usually through their returns, we monitor what they are doing. It's only when we are not satisfied with what they are doing, we find out in their books that we can now do a spot check. However, the law, of course, allows us to do, inspection on these companies every other year, right? But right now, because of COVID, the emphasis is, the concentration is more now on the off-site. Yes, because through their return, and of course, we have come up with certain regulations now. They are to be making some submissions, which prior to now we are not in place, to ensure, just to enable us know actually what they are doing, right? So we have that offsite as a window for now. We are really utilizing that very well at the moment.
Okay. Thank you very much, sir. Dr. Anumaka, what are the specific roles and functions of internal audit of an organization in ensuring sound and good corporate governance of the enterprise? And there's a second one, talks about, is it compulsory for all chartered accountants to register with Financial Reporting Council as a professional body, even if the entity has registered as a corporate body according to section 41 to 48 of the FRCN Act? The first question is specific roles of internal audit to drive corporate governance in an enterprise. And then the second is it compulsory for all chartered accountants to register with FRCN?
Okay, let me start with the last question. Are you hearing me?
Yes, sir.
Okay. Whether it's compulsory for all chartered accountants to register with Financial Reporting Council. I'm happy he even quoted the act itself. If you go to our section 8F of the Financial Reporting Council's Act, what it says is that we should maintain a register of professional accountants and other professionals engaged in the financial reporting process. It might not necessarily be compulsory that as a chartered accountant, you must register with FROC. Why it is necessary is that you may not know where you will find yourself tomorrow. Because if you are in any position that will engage you in financial processes of that company, of course, you must register. So that's why you may need to register on your own, or you wait when you are signing an account. Then the specific roles and functions of internal audits in ensuring good corporate governance. If you go to Principle 18 of the Nigerian Code of Corporate Governance 2018, it's specified there that one of the major areas is to provide assurance to the board by conducting periodic evaluations and determining the effectiveness and efficiency of the company's internal control systems. And also, he liaises with the external auditors when they come. That is his responsibility, because both of them are like gatekeepers, and he has to, because he's the man domiciled in the company. The other external auditor is somebody that is coming for the normal statutory audit. So it is him that will liaise with him. Also, if we look at the whistleblowing cases, I think it behoves on the internal audits to bring cases like that to the notice of the committee responsible for audits, the board committee responsible for audits. And even in business conduct, for example, and ethics, these are areas where the internal auditor will feature. And finally, he too should look at ethical culture in the company, especially by giving advice to the board members in relation to insider dealing, conflict of interest, related party transactions, and all that. These are areas where internal auditor will find himself in governance.
Okay. Thank you.
Sorry about that. I'm sure she's having network issues. I'm going to take the next question, which is for Mr. Ifrs. What has the NCC done to support telecom consumers in view of COVID-19? Emphasis will be on what has been done rather than what is in view.
I think that question has been answered, where I said that NCC is not the primary service provider. NCC is the regulator that makes sure that the interest of the consumers is protected. That
okay,
primary service providers are the telcos, and we are aware that telcos have done quite a lot to give back to their consumers, and I even do more. So that question has been taken care of.
Okay. My next question is for you, sir, so please don't go yet. How do we sustain the growth in the telecom industry after COVID-19 pandemic?
Of course, the sector has been acclaimed as one of the fastest growing sectors in the economy, and has been contributing massively to national gross domestic product. From what you could see, the trajectory is moving more towards data services. And we're aware that the telecom companies have their network expansion plans towards increasing infrastructure on 4G, because competition is growing quite stronger in data service. So every telco has a responsibility to expand their networks to be able to increase their market share with respect to the data service. If at the end of May, only 77 million subscribers are on broadband, that means there's over 100 million other subscribers to go for on broadband service. And that's where the business is. That's where the growth strategies are. So every telco is improving on their level of investment to be able to increase their capacity and increase their market share in that regard.
Okay, thank you, sir. Because of time, I'm just going to take one more questions each for the participants, and then I have an attendee here who wants to ask his question live, and so I'm going to allow him that. The Financial Reporting Council, this question is for you, Dr. Anumaka, issued the Nigerian Code of Corporate Governance, and the code has become effective. Why is the Nigerian Communication Commission still using its 2014 Code of Corporate Governance?
Okay, I'm happy Ephraim is here so that he can take the backlash of that. Like I said before, they are not supposed to be using that code because we had agreed, even the stakeholders and the regulators themselves, the NCC itself, has even concluded their guidelines. Sure. So they cannot say that they are using their code. Maybe the guy may have to check back, because I know I'm very aware that they have concluded, and it's like they were about issuing the guideline before the COVID thing. If you looked at the pages of newspaper, there was supposed to be a stakeholder engagement, I think on March 30th or March 31st. And yet they are still saying that they will still hold that subsequently. So I'm not sure they are using, I'm not speaking for NCC, but I'm not sure they are using their code. Every sectoral code now has become non-existent. What they have now is guidelines. Thank you.
Okay,
let me
Mr.
just,
Ephraim, okay.
Let me add to that. If you recall my presentation, and I think what NCC has done with respect to Code of Corporate Governance should be commended. What I said is that as way back as 2014, we developed a sector-specific code. And this was on until November 2016 when we made it mandatory. This was as a prelude to the economic-wide multi-sectoral code that has come into effect this 2020. And what we are doing is to now collapse what we have and adopt the multi-sectoral code that FRC has brought to bear. So by post-COVID, once the lockdowns are over, we'll bring out the guidelines, having consulted our stakeholders in the industry. And once that is done going forward, that becomes the code that they adopted and complied with by all telecom companies. And NCC specific code will now be of no effect. Thank you.
Thank you, sir. Mr. Leonard Aka of Nikon. This is an interesting question. I would like to know what Nikon is doing about their website, which has not been updated for over a year. Operators rely on your website to obtain relevant information regarding circulars, both past and present, brokers and agents license, and this website has not been updated. This is interesting.
Thank you very much. Actually, we have had some challenge on the website, but if you notice, if you're a regular visitor to that website, I'm sure you will notice some improvement. And this improvement, I believe, is going to continue until we get it to what it should be like. There was a time it was down, but like I said, work is going on there now, and very soon, I'm sure it will be updated, and all relevant information that should be obtained or contained in the website, you will find there. I assure all those who are interested in visiting our website that work is going on. So very soon it will be.
Okay, thank you. Mr. Isiaka Ibrahim is in the audience and he will prefer to ask his question himself. Mr. Ibrahim, we're running out of time, so you have 30 seconds to quickly ask your question. Please make it straightforward. Are you ready, sir?
Okay, I'm ready. Can you hear me?
Yes, we can hear you, sir. Okay,
my first comment goes to the two regulators there, the NCC and the Nikon. As a regulator, I think we also need to be upbeat in whatever we are doing. I work in an operator firm, and I know that regulators are always very hard on non-compliance. If FRC has issued this code since, if FRC has issued its code since 2018, and it takes effect from January this year, and here we are, NCC and Nikon are still not in compliance with that code, I think it's something they need to take serious. Kudos to PENCOM. PENCOM issued its own circular late December last year, and the operators are now using it. They are working into the FRC code. That's just a comment. Then the other one is that I wanted the doctor and the guy from FRC. He talked about reporting to FRC on our compliance with the code. I know that for people for operators, we all report to our sectoral regulators. Are we also supposed to report to FRC again? And he said that the report should be hosted on our website for a minimum of 5 years. Is this still not supposed to be a yearly compliance reporting? So if it's going to be for a minimum of 5 years, that's presupposes that it's just a one-off item. I know in the pension industry, the operators report to PENCOM in respect of compliance with Code of Corporate Governance. So I want you to share more light on reporting to FRC on that again. Thank you.
Thank you, Mr. Ibrahim. Just before the answers are taken to that question, we have run out of time, and so we will not be able to take any more questions. We have taken cognizance of all the questions that have been sent in, and these questions will be emailed to the speakers and responses sent back to you, the people who have asked the question. So these answers are the last that we're able to take. Dr. Anumaka, the question is for you. If you would answer briefly, please, sir, because of time.
Yes, he was saying that why are they not allowed to report only to their sector regulators? This is what it is. If you read the NCCG 2018, the implementation of that code says that sector regulators are going to monitor compliance, and they have to do it in line with FRC. So that is why you must, of necessity, report to FRC. Then the template, you say that we ask you to hoist for 5 years is because in that investors portal, it is necessary that they will know what has gone over the years. If you just put it on 1 year and remove it the next year, your stakeholders may not know what has gone between the years. What is the next question again? I think these are the two I wrote down.
Sorry, can I just comment on the issue of Nikon not implementing the code?
Yes, sir, you can, sir.
Okay, thank you. Quickly, I want to say I don't think his comment is fair on Nikon because first of all, let me just mention to you, in 2009, when Nikon issued the Code of Corporate Governance, I think we are the second in the entire financial sector that came up with a sector code in 2009. And as we speak, I think I also start to be corrected. I think it's only Telecom that have issued their guideline. We are doing a lot. He may not know. It takes a lot of, if you do not consult very widely, Mr. Numaka, who is here, he can attest to it. We have done all the consulting, and we are, as I speak, the final document is just ready to be released. It's not a case of we are doing nothing or we've not done enough. If you do not get the operators to understand, you find that you may not achieve what you have intended to. So it is needless rushing to drop a document, and operators will not, even understand what you want to achieve, and possibly you find like to get the result you intend to, you may not get. So it's better we take this time, and like I said, we have almost done with ours, and if cannot take before the end of this month, we'll be releasing the guideline for the insurance sector.
Thank you very much for your time, sirs. Because of time, we won't be able to take any more questions or go beyond this. Mr. Dairu, I would like you to, in 30 seconds, if possible, give us a closing remarks. What's your last word from Telecom to all the operators that are here this afternoon? Your microphone is muted, sir. Could you unmute your microphone, sir?
Yeah, just to say that as compliance professionals and people in the financial and communication sectors, that we must continue to take issues of compliance very strictly. Any time that you are managing money on behalf of others, you have to have extra vigilance. The pandemic has put a lot of pressures on us because even though we cannot work as we used to work, our clients will not want to see it that way. So to that extent, we must continue to apply vigilance. We must continue to make sure as compliance professionals that within our organizations, we work with management to ensure the right thing is done, and always to be on the right side of the law. Thank you very much for this opportunity to share some of the perspective of the pension industry.
Okay.
I've also learned a lot from my other colleagues on the panel.
Okay, thank you very much for your time. As Mrs. Hilda Inco will take it over from here and round off this webinar. Thank you very much for joining us this afternoon.
Thank you, and thank you. And I would like to especially thank all our attendees, for as many as some people logged in way ahead of 1 o'clock. Thank you for joining us, and thank you for the robust discussions we've had this afternoon. Thank you, Mr. Aka, thank you, Mr. Wukunaya, thank you, Mr. Dahiru, and thank you, Dr. Anumaka. We look forward to having you on our subsequent programs. And for our attendees, please watch this space. The Society for Corporate Governance will continue to churn out programs and webinars that will continue to expand knowledge on the subject of corporate governance and best practices. We hope to see you very soon as COVID allows. Also, please note that you're welcome to join as a member of the society. Our staff are there to answer all your questions on membership. Also, we've sent you a link to an assessment form. We'd like you to assess this program, tell us how we've done, and tell us what you'd like to see us do better. On that note, on behalf of the board and management of the society, I'd like to say thank you very much and enjoy the rest of your day.
Thank you.
Thank you. Thank you very much.
Hold on. Sorry, we have been on this.